Yo, what's going on, man?
How are you doing? So, welcome back to the channel, everybody. Today, I am joined by my good friend and colleague, Austin, aka Licknack. Austin,
Yep, that's
welcome,
me.
as always.
Thanks for having me on, Logan. I appreciate you reaching out to me and having me come on to the show.
It's always fun doing videos with you, bro.
Yeah, it's a good time.
So, tell us what we're
yeah,
going over today.
we have a fun. So it's rather simple. We're just taking a look at SPY, which is the S&P 500 ETF. A good. It's good. It's used as a good indicator to kind of gauge how the market's behaving. Right. It's very similar to just the S&P 500 index, which is SPX. This is just an ETF, which is an exchange traded fund, and this is the main equity that we kind of trade when we want to. If the market's bullish, we'll look. We're long SPY. If the market's bearish, we're short SPY. Right. So looking at this equity, I guess you could call it an equity. This ETF can give us a good idea of how where the market is, and that's kind of what we're going to be doing today. Obviously, there's a bunch of fundamental reasons that we could go into, and with what the federal government is doing with monetary policy, inflation, interest rates, all this stuff. We can go into all that jazz, but today what I'm really going to be focusing on is the technicals. Surprise, surprise, right?
That's what we specialize in.
Yeah. So here we go. So I believe you can already see my screen.
Yes,
but
sir.
I'm going to be going to switching over. And I did have the TA done already, but I'm going to be doing it live right here. And if I stop in between talking, it's because I do have the hiccups currently. I don't know how that happened, but like right before I hopped on here, I just started hiccuping.
It's okay, man.
Yeah, my apologies. But so yeah, SPY in my opinion looks rather good. Let's just take a little zoom out right here and take a look at the macro view. Let's go to a one-day chart, and I just want to view all the significant price action that we've been seeing since what was the COVID capitulation, right? We could see right in February of 2020 the market did capitulate to the downside. People call it a market crash. I don't necessarily use that terminology. I refer to it as a capitulation, right? And that's just because of that quick V-shaped recovery and how quickly we just rebounded back into bullish price territory. But the whole time, the really compelling thing to me is this 20-week SMA, simple moving average, and exponential moving average. This has been our support level, man. This has been the lifeline for SPY in the entire stock market here for the better part of what is it? 580 days, right? So that's a very long time.
Almost 2 years.
Yeah. That's a very long time. That's a very significant level. So SPY is riding this 20-week SMA EMA very, very beautifully. And if we go down and look on some smaller time frames over to the hour chart, you could see, man, it's bouncing off like to a T, right? Our past 3 times here have been quite beautiful. Very nice bounces, and we were able to, take advantage of that. And we expected SPY to bounce at the 20-week, but in general, we're looking at SPY, and we know that we're still bullish because we're holding the same trend line, the same moving average trend line that we've been holding during this entire quote-unquote bull market. But where are we right now? What can we expect in the short term? What levels do we need to get over? What are we kind of looking for? And I have a very interesting perspective to kind of show you guys today. But first, what I want to do is, I'm going to be doing a live TA, so I'm going to be labeling stuff. I do want to label this as the 20-week SMA EMA. We can make this yellow to fit the color of the moving average band. This is a very significant level, guys, so we have to take note of this moving average. The other thing I'm going to be taking note of is this significant high that we saw here on early September 1st, September 2nd, all the way to our local low of this kind of ABC correction that we saw here. And when you do a Fibonacci extension from, let's actually get rid of these circles so I can see properly. When you do a Fibonacci extension from the top here to the bottom, you can see our 1.618 actually resides in a very interesting area. And that is kind of where we've been getting rejected from, and we'll make these red, all this time, right? Pretty much since November. SPY has had a deviation. Keep that in mind. We will acknowledge it. But yeah, this 1.618 level is very, very tough resistance for us to get over. And the only thing that makes it kind of confusing for investors, especially technical traders and investors, is this deviation, as I would call it here. And this is a very common thing, right? Oftentimes you will see deviations in price, right? I wouldn't say, and the reason why I call it a deviation is because I don't believe it's true to the trend, right? The price was able to sustain up there for a little bit, but it got shot down very quickly and then quickly resumed its normal trend that it's been on. As I said, the market still looks bullish. We are continuously making higher lows, right here, which does look quite good. But in reality, man, we are still fighting this 1.618, that 472 to 473 range is still major resistance for the S&P 500. And it's pretty convenient right now. The market is open. Right now it's currently 12:54 p.m. Eastern Standard Time over here in Massachusetts. So, halfway through the day, and you could see that we had a very nice green open for the day, but we quickly got shot down, man, right from that 1.618. We were not able to get the job done. I did have confluences to believe that we would get over that level, but Fibonacci does not lie, man. Leonardo knew what he was talking about when he made this stuff up, and it's definitely applicable to not only a lot of aspects of life, but as you can see, these markets. And I have a pretty cool little, we should probably label this stuff. Let's label this a deviation. Logan, do you have any thoughts while I do this?
I think it's actually really funny because the deviation almost looks like a mistake, right? We saw buyers take us all the way up, and then buyers and sellers start punching each other in the face with that consolidation right below where you have the word deviation. And then sellers eventually get that knockout punch and bring us right back down to where prices were, pretty much almost the same exact area. So it was very interesting to see that. And it is, that's exactly what you would expect from a deviation like that.
Absolutely. It's just not true to the trend. And we can see, I always come back to Bitcoin, right? That's the bread and butter. But Bitcoin has some very similar stuff going on. I'll ignore all this stuff. This was from a previous probably example I was showing somebody of a fractal. But Bitcoin loves to present us fractals that can be used in every aspect of trading. So let's get rid of all these lines. This should be a blank chart for the most part. Yep. Bitcoin actually had and I'm using this in comparison to SPY to showcase kind of that deviation. If we measure from our high of 2017 all the way to our bear market low in 2018 and do a Fibonacci extension from here, you can see that we're getting rejected right from our 1.618. But what do we notice right here?
The deviation.
What do we notice? We notice a very strong deviation. There we go. Yeah. Why is it doing that to me? Am I pressing a button? I don't know. But yeah, you get the idea, right? We had a very strong deviation where we actually went, over $6,000 above our 1.618, and people thought that we broke it. But in reality, it was just buyer strength kind of showing itself, but it was not enough to carry the trend confidently over that 1.618. And I think we may be seeing something similar to that in the S&P 500 right now, the SPY ETF. We see this deviation, but in reality, we're unable to get above this 1.618. So, it is what it is. It does have a rather bearish feel to it, right? Anytime that you get rejected from resistance. But, I will say we are still above our 20-week SMA EMA. We are continuously making higher lows. And that's really all you could ask for in a healthy market. So as long as that continues, I remain optimistic for the market, especially in 2022. I think that there is still a lot of potential in 2022 for growth. I know the S&P 500 did, I believe it was 25 to 30%.
Yeah, on the upper end of that.
In 2021, I don't know the exact number of. I believe it was 29%.
Yeah, it was on the upper end for sure.
Just because we had such a great performance last year doesn't mean we can't do well again. So I am expecting the S&P 500 to do well in 2022, but obviously there's going to be some turbulence that along the way. There will be corrections along the way. There will be resistance along the way, and there's going to be a lot of uncertainty. There's going to be a lot of FUD. So we have to be prepared for that, especially as traders, right? Long-term investors really don't have much to worry about. But right now, SPY is definitely acknowledging some pretty gnarly resistance, and you should take note of that. So yeah.
And support, right? So do you think, due to the fact that we are in between such significant resistance and support, that we're going to see more consolidation before anything? Or do you think we're going to expect a breakout of one of those in either direction?
Yeah. Well, it's tough to say. I mean, obviously, seeing us get rejected may suggest more time of consolidation or maybe even some more downward pressure. But, what does this deviation tell us? It tells us that the buyers are present, right? It tells us that, like, hey, we had the strength to push us up above this level one time. Maybe you shot us down, but we can do it again. So I do think that, everything's kind of pointing in favor of the buyers right now, right? We did have this deviation showing strong buying strength, and we are continuously making higher lows, right? These are very much characteristics of a quote unquote bull market, right? Obviously, this could be some sort of local top, and we could be talking about a top right now, but until SPY, breaks this 20-week confidently, I think the market looks pretty good. And I think it's in favor of the bulls still, even with what's going on today. It's not pretty today, but hey, it looks okay.
I agree. I think we are still in the favor of the bulls, and I'm not ruling out just a correction, which is what we're in now. I think that that's another possibility, that we are just correcting from the last move that we had, which was quite dramatic in the last couple of days.
Yeah.
So there's a possibility that we just break through this 161.8 level. But like you said, of course we have to especially acknowledge it now, the fact that we've seen yet another respect of this level.
Yeah, and I didn't take this in my whole idea for the past few weeks was like, after we broke above this, I was anticipating, okay, like this is our time to move on. And it didn't really seem like a deviation. But now that we're getting rejected, today is giving us a lot of data, by the way. Even right as we're filming this, I'm getting more information. It's very clear and evident that that we're getting rejected from this 1.618, right? It's not even a question. So we got to get over that level. And guys, it's not just that 1.618, right? We can deviate above it. I want to see a confident break and daily closes above, that 472 to 474 range, which I'm going to write out here. That's the range we need to get over, guys, right? Though the 1.618 is significant, you can't look at it as just a straight line. You have to give it some width, right? You have to give it some room to play with, and that's really what we should be looking at.
Absolutely,
right
absolutely.
Yeah.
There's no lines in the sand in trading, just zones.
Yeah, and unfortunately, it takes some people a little while to realize that, right? Which is what it is. But yeah, we need to see a confident break above that 472 to 474 level, and if we do that, I think the S&P 500 could go on for a little run. So, yeah.
Awesome, Austin. Thank you so much for your insight today.
Yeah, dude, I appreciate you having me on. Until next time, right?
Until next time.